Hey, knowledge seekers, and welcome back to the deep dive. Before we get started, don't forget to hit that subscribe button and the notification bell so you never miss an episode.
That's right.
Now, today, we're not just talking about investing or UPSC exams.
Right.
This is about understanding something that affects all of us every single day. Financial markets.
Yeah.
Whether you're a student, a professional, or just someone who wants to be financially savvy.
Right.
This one's for you.
Absolutely.
We're going to explore the structure, function, and impact of financial markets in India, a topic often discussed in the UPSC GS3 paper, but relevant to anyone who wants to understand how the Indian economy really ticks.
Yeah, it's fascinating how often people think of financial markets as this separate world,
Yeah.
one that only affects big investors.
Yeah.
The truth is they're deeply intertwined with our everyday lives.
Absolutely.
Yeah.
And to help us unpack all this, we've got an expert with us who can break down even the most complex financial concepts into something we can all understand,
Hopefully.
ready to dive in.
Let's do it.
Okay, so our source material defines a financial market as various trading platforms for securities.
Okay.
Now, that might sound a bit technical, but think of it this way. Every time you buy stocks or invest in a mutual fund,
Right.
you're interacting with the financial market.
That's a great way to put it.
Yeah.
And while there are many different types of financial markets, like the bond market, forex market, even the cryptocurrency market, let's focus on two key players in the Indian context, the stock market and the bond market.
That's good to me.
Mm.
So tell me more about the stock market. What makes it so important?
Well, in India, the stock market, primarily represented by the Bombay Stock Exchange and the National Stock Exchange, provides a platform for companies to raise capital by issuing shares.
Okay.
This allows them to fund expansion, innovation, and even create jobs. Think of it as a way for companies to grow and contribute to the economy.
So if I buy a share in a company, I'm essentially becoming a part owner, right?
Exactly. And as the company grows and becomes more profitable, the value of your shares can increase, allowing you to earn returns.
That makes sense.
Yeah.
Now, what about the bond market? How does that work?
Think of bonds as loans.
Okay.
In the bond market, investors lend money to companies or the government for a fixed period of time at a predetermined interest rate. It's a way for these entities to raise capital for various projects and initiatives.
So if I buy a bond from the government, I'm basically lending them money,
Yes,
and they promise to pay me back with interest.
exactly. Bonds are generally considered less risky than stocks, making them an attractive option for investors seeking a more stable return.
Okay, so we have these different markets where people can buy and sell securities.
Mm.
But what exactly is the role of these financial markets in the bigger picture? The source mentions 12 roles.
Right.
That seems like a lot.
It is. But let's pick a few key ones that are essential to understanding how financial markets impact the Indian economy. One of the most important roles is the allocation of capital. This basically means ensuring that money flows to the most productive areas of the economy. Imagine a farmer who needs a loan to buy new equipment, or a startup that needs funding to launch a new product.
So financial markets act like a matchmaker, connecting those who need capital with those who have it.
Exactly. And when this process works efficiently, it directs resources to businesses and projects with the highest potential for growth and return. This ultimately boosts innovation, creates jobs, and drives economic growth.
That's fascinating. It's like financial markets are the engine that keeps the economy running smoothly.
Yeah.
But how do we know that the money's going to the right places? Who decides what's productive?
Well, that's where another crucial role comes in price discovery. Financial markets act like a giant collective brain processing vast amounts of information to determine the prices of assets based on supply and demand.
So the market itself determines what something is really worth.
Exactly. This continuous process ensures that prices reflect the perceived value of assets, which in turn guides the allocation of capital towards more promising ventures. And this is where things get really interesting, especially in the context of the Indian economy. The way price discovery works here can be quite different from developed markets.
Oh, that's intriguing. Tell me more about that. What makes India unique in this regard?
Well, for one, India has a large proportion of retail investors, many of whom are new to the market. This can lead to greater volatility and sometimes even irrational exuberance influencing price movements.
So emotions can play a role in how prices are set. That's quite a contrast to the image of a purely rational, data-driven market.
Absolutely. Additionally, factors like regulatory policies, government interventions, and even cultural nuances can influence investor behavior and impact price discovery in the Indian context.
That makes a lot of sense. It's like a complex ecosystem where various forces interact to shape the market's dynamics.
Precisely. Now let's move on to another critical role of financial markets: liquidity creation. This essentially means making it easy for people to buy and sell assets without major price fluctuations.
So it's about ensuring that there are always buyers and sellers in the market, keeping things moving smoothly.
Exactly. A highly liquid market allows investors to easily convert their assets into cash when needed, which in turn encourages greater participation and investment.
I can see how that's crucial for economic growth. If people are confident that they can easily buy and sell assets, they're more likely to invest in the first place.
Precisely. And this is especially important for emerging markets like India, where attracting investments is crucial for development. Think about the 2008 financial crisis, which you mentioned earlier.
Ah, yes, the crisis that sent shockwaves to the global economy.
Yeah.
What's the connection to liquidity here?
The crisis severely impacted liquidity in financial markets worldwide, including India. As investors panicked and rushed to sell their assets, prices plummeted and credit markets froze, making it incredibly difficult for businesses to access capital.
So it's like a domino effect, where a lack of liquidity in one part of the system can cripple the entire economy.
Exactly. And it highlights just how crucial a well-functioning and liquid financial market is for overall economic stability. Now, speaking of real-world events, let's bring in another example, one that often makes headlines and captures the imagination of many, the IPO or initial public offering.
Ah, yes, the IPO. It's always exciting to see a successful Indian startup taking that leap and going public. It's a chance for everyday investors to get a piece of the action right.
Absolutely. And it's a prime example of how the financial market facilitates capital allocation. When a company goes public, it issues shares to the public, raising capital to fuel its growth ambitions. This influx of funds can be used to expand operations, develop new products, or even acquire other companies.
It's like a company graduating to a whole new level, going from a private entity to a publicly traded one with potentially thousands of new investors cheering them on.
Exactly. And this process wouldn't be possible without a robust financial market that can handle such large-scale transactions and ensure fair pricing through the mechanisms we discussed earlier.
Now, all of this is fascinating and definitely sheds light on the complexities of the Indian financial market. But I'm also curious about the other side of the coin, the risks involved. The 2008 crisis is a stark reminder that things can go wrong, even in the most sophisticated financial systems.
That's a crucial point. And it brings us to another role of financial markets, one that's often overlooked: risk management.
Interesting. Tell me more about that.
Financial markets provide tools and mechanisms for managing various types of risks, from interest rate fluctuations to currency exchange risks. For example, businesses can use derivatives, which are financial instruments that derive their value from an underlying asset, to hedge against potential losses.
So it's like buying insurance for your investments.
In a way, yes. However, as we learned from the 2008 crisis, these complex financial instruments can also be misused, leading to unintended consequences.
It seems like finding the right balance between innovation and regulation is key to ensuring that financial markets serve their purpose effectively without jeopardizing the stability of the system. It's like walking a tightrope, isn't it? Harnessing the power of financial markets while also keeping them in check.
Exactly. It's a constant balancing act. And it requires vigilance from regulators, policymakers, and investors alike.
Well, I have to say, this has been an incredibly insightful deep dive.
It has.
We've gone from the basics of stocks and bonds to the complexities of price discovery and risk management. It's amazing how much we've uncovered about the Indian financial market and its impact on our lives.
Yeah, it's been a pleasure unpacking these concepts with you, and I hope our listeners have gained a deeper appreciation for the intricacies of financial markets and their crucial role in the Indian economy.
Absolutely. And for those of you prepping for the UPSC, hopefully this deep dive has given you a solid foundation for understanding the financial markets section of the GS3 paper.
Right. And even if you're not a UPSC aspirant, we believe that financial literacy is essential for everyone. Understanding how money works can empower you to make informed decisions, whether you're investing, saving, or just trying to understand the economic landscape around you.
Couldn't agree more. Remember, the financial world doesn't have to be a mystery. With a little effort and the right guidance, you can navigate it with confidence.
Absolutely. Stay curious, keep learning, and don't be afraid to ask questions. The more you understand about financial markets, the better equipped you'll be to achieve your financial goals.
A huge thank you to our expert for sharing their expertise and insights with us today. It's been an enlightening conversation.
My pleasure. Always happy to demystify the world of finance.
And to all our listeners, thank you for joining us on this deep dive into the Indian financial market. We hope you found it informative and engaging.
Yes, and if you did, be sure to give us a thumbs up and subscribe to our channel for more deep dives into fascinating topics that matter.
Don't forget to hit that notification bell so you never miss an episode. Until next time, stay curious.